How's it going, everybody? It's Stas here. So in this video, we're going to be breaking down 10 stocks that I'm looking at this week in the stock market. And yes, I know tomorrow is Labor Day. The markets are closed, but I have nothing else to do right now. So I figured, let me make a video because every Sunday, we make videos like this going over the upcoming week. So I figured, let me stick to the tradition. So if you guys find value, hit the like button, drop me a comment, get your $50 from M1 Finance, your 2 stocks from Webull. Check out my Patreon as well if you want my real-time buys, sells, call-outs, a morning update video, and private Discord access. All of that's on Patreon, linked right down below. And let's get right into the video. So you guys know the markets, SPY, which tracks the S&P 500, QQQ, which tracks the NASDAQ 100. These have been hitting all-time highs after all-time highs after, you guessed it, all-time highs. And looking here on the 20-day chart on SPY, you can see we are at a bit of a resistance right now at $454, $453, and we've been making higher lows as well the past couple of trading weeks. We've been trading above the main 180 moving average here as well, and we're looking like we're in an ascending triangle. On top of that, even though we are seeing a bearish divergence as well. So there's a lot going on right now, and I've mentioned this before, but I'm going to touch on it very briefly again here for you guys. So we're seeing a bit of a bearish divergence. The RSI is weakening, even though the markets have been moving higher. So that is a bearish sign. That is a sign that we could be seeing more downside in the near-term future, even though, again, we're at all-time highs right now. And I'm seeing, like I said, an ascending triangle, which means if it plays out, this could end up seeing a leg up out of the all-time high, out of the resistance here, which is at 454, and we could be going 460, 465. So it's in an interesting spot. Let's just put it that way. SPY making all-time highs, ascending triangle, bearish divergence. I'm looking to see how this ends up playing out. If we end up dumping under the main moving average here next week, maybe the week after, we start going down 440, 430 even, that would be a sign that, hey, the bearish divergence is playing out. But if we see the leg up out of the all-time high, that would mean, you guessed it, the ascending triangle is playing out. So watch out for that on SPY. And when it comes down to QQQ, very simple. We're seeing the same thing. Bearish divergence, ascending triangle. So let's see. Do we break out of 383, hit an all-time high, maybe go to 390, 400, or do we end up selling off a bit, breaking under that main moving average and slowly going down 375, 370, 365? What is going to happen? That's the million-dollar question, and that is what I'm looking out for when it comes down to the overall market. So let me know your thoughts. Drop me a comment down below. Are you bearish right now? Are you bullish? Are you neutral? Let me know in the comments. And if you all find value in this video and my videos in general, and you want to support me the free way, hit that like button and subscribe. And let's talk a little bit about the futures quickly, because even though the markets are closed tomorrow, the futures market is still rocking and rolling right now. And we have the S&P futures, they're down 0.07%, nothing too crazy, but they are red nonetheless, down about 3 points. The Dow futures are down 33 points, down 0.1% pretty much. We have the NASDAQ 100 futures. Let's take a look here, guys. Where are they? They're actually up. They're up about 9 points, up 0.06%, and we have gold futures down about $1, silver up 6 cents, up 0.25%. So pretty much at this point, guys, we're not seeing any drastic move in either direction when it comes to the S&P, Dow, NASDAQ, gold, and silver futures. So now that we talked about that very briefly, talked about where the futures are trading, let's go over some stocks. And I do have 10 listed here and a couple of bonus ones if you guys do stick till the end. So let's bang through these, if I can even talk today, guys. And by the way, happy Labor Day tomorrow. I mentioned again, the markets are closed tomorrow. I wish they weren't, but hey, it's a federal holiday. It is what it is. The markets are closed, and let's talk about some of these stocks now. Number one is Activision Blizzard. This is one that's been in the negative spotlight for a couple of weeks now. They reported earnings that weren't bad. I mean, they weren't that great either, kind of neutral earnings. And if you guys have been watching Activision Blizzard, this stock was $104 back in February, and it hit a low of 77. So that's a drop of 25%. It's in a bear market, and even now that it's up to $81, $4 off the lows from a couple weeks ago, it's still in a bear market. And they have some internal issues there within the company. We're not going to get into that right now, but if you look a bit deeper, there is a lot of internal issues going on right now with Activision Blizzard. I believe the higher-ups, the employees, the culture within that company is not the best right now, which is why it's been selling off for a lot of the majority of the past couple of weeks, ever since the middle towards the end of July. And for me, this being one of the biggest video game companies out there, and arguably my favorite one. I mean, it's between, well, I don't want to say that. I mean, I like a lot of the games from Activision, EA, TTWO is solid as well, Take-Two. And I don't want to say which one's my favorite because I don't even know why I said Activision is my favorite, because quite honestly, I don't have a favorite. But this one being down 20%, it's worth watching. If you look here on the 20-day chart, or this is actually the 4-hour chart, we're towards the bottom of this downwards channel. We're trading well under both moving averages at this point. And again, we're in a bear market. And if you pull back a bit onto the 3-year chart, which I like here, guys, and let me clear the drawing set, this is still holding an uptrend on a 3-year basis. Would you look at that? If we were to bounce here at $78 and start moving up towards the mid-80s, high 80s, low 90s, it would make complete sense when it comes to the overall trend of the stock. So I like Activision here. It's going to be rocky. It's going to be volatile the next couple of weeks. Heck, maybe even the next couple of months. But I feel like buyers will ultimately step in eventually, right? I don't know when it's going to happen, but I think eventually buyers will step in here. And sure, I mean, it could go down to the 70s. That's possible, towards that 180 moving average on the 3-year chart. And that would be an even better opportunity. And I think buyers would definitely step in at that point. In my opinion, no way Activision goes under 70. I mean, I could be wrong, but there's no way in my personal opinion. But again, I could be wrong. So if this starts dumping, or even here in the 80s, I might start nibbling a little bit of Activision in the coming future. We'll see. Amazon is another one that I'm looking at, ticker symbol AMZN. If you all are in my Patreon, which again, join that down below, there's a lot of value on there. This is one that I bought after they reported earnings. So we saw the big drop on Amazon. You guys remember this. It went from 3,700 down to about 3,350. It sold off, down to about 3,200, and I bought it, I think, at 3,330 to be exact, 3,340. I held through some pain. It got down, like I said, to about 3,190, 3,200, and then it rebounded sharply. And full disclosure, I ended up selling out because it was a swing trade position. So I made my money on it. Made about $80 to $100 per share profit. I forget on a percentage basis how much I made. I got in at 33.40, sold I think at about 34.20-ish. So I made about 3-ish%, a little bit less than that, which I'm cool with. That was about a couple week swing trade there. And now that we saw a breakout of the 180 SMA on the 4-hour chart, it pulled back a bit as well, and we're seeing consolidation above 34.50 plus that 180 SMA on the 4-hour chart. This could be setting up for another entry point. Keyword is could. It could dump as well, but I think as long as we're above both moving averages, which now we are, and the 50 starting to catch up with the 180 SMA, so we might see a golden cross. And as long as we're above 3450, this could be trying to fill the gap up. There's a chance it fills the gap over time up to about 3,700. And with the holiday season coming up, we know what happens during the holiday season, guys. Amazon, they crush it, right? You know, this could fill the gap from 3,470 up to 3,770, which gives it about $300 per share upside, 250, 300, or about 6-7%. So I like Amazon, and I'm still long the stock. I mean, just because I sold out of my swing trade, I made a quick little profit there, doesn't mean I'm not long Amazon anymore. I still have a long-term position on it, and my average cost on that, I believe, is 27, maybe 2,800, and I'm holding on tight, you know. So I like Amazon into the holiday season here, no doubt about it. I mean, who doesn't at this point? Well, some people don't, but most people like it. AMD is another one that I'm looking at, Advanced Micro Devices. This is another one that I sold out of pretty timely, if you ask me. I mean, I don't want to toot my own horn, but I got into AMD at $76 a couple months ago, and I sold it at 118 as it ran up very aggressively from $90 in the end of July all the way to 118 in the beginning of August. I mean, this in 1 week alone went from 90 to 120, guys. That was a 25% move. So I ended up liquidating my Amazon, or rather my AMD position on that run up. And now I'm looking at it again as a potential entry. You know, we cooled off a bit as expected. It went from 122 to 102, so it lost $20 value after I sold. And now it's found. It looks like it's found a new support around the $100 to $110 mark, which I also expected above this 180 moving average on the 4-hour chart. And now it seems like the past couple of days, particularly here, we've sold off from 114 to 108, and back on that 4-hour chart, you notice how we're touching that 50 moving average. So I think we could bounce off of this, right, and complete the inverse head and shoulder that we're seeing here, left shoulder, head, right shoulder. And where would that right shoulder in the inverse head and shoulder complete? It's going to be anywhere from 118, 120 to 122, which is that gap that I believe we could catch as a potential trade, which is anywhere from 6, 7, 8% upside, depending on, of course, where you do end up getting in. And another inverse head and shoulder that I like right now is PayPal, PYPL. Very clean looking inverse head and shoulder. We have the left shoulder here. We got the head right here. We got the right shoulder right here. And last week, we got news, or was that the week before? Actually, I think it was last week. We got news that PayPal is looking to allow trading in terms of stocks. They're looking to start their own brokerage, or whatever you want to call it. I think it's called Invest with PayPal, if I'm not mistaken. If I am mistaken on that, drop me a comment down below. Please correct me. But this is awesome because it's a new growth vector for the business, which is great. This is awesome, especially for me as a long-term shareholder of PayPal. I've owned it for a couple of years at this point. You know, I started buying PayPal in the 90s, and I averaged up on this one. You know, my average cost now, to give you guys a little perspective, is 180 or 190. So I've averaged up a ton on PayPal, and I might even continue doing that, you know, especially if it sells off maybe to the mid 200s. I'd probably add more to it and let it ride from there. So overall, I like it from a long-term perspective, especially now that we got the Invest with PayPal feature on the way, and I like it from a trading perspective. You know, like I said, clear inverse head and shoulder. We're trading above the moving averages. It looks like we're about to get a golden cross this upcoming week, maybe, and we consolidated above both moving averages last week. So this, in my opinion, is getting ready for another leg up, probably towards 305, 310. Heck, maybe we take the highs out 312 from the end of July and hit a new all-time high. So watch out for PayPal. EA is another video game stock that I personally like here, and I've been tracking this for months, and quite honestly, it's like watching paint dry at this point. I mean, every time it gets to 145, 150, which you can clearly see on this 4-hour chart has been resistance, in the past here, every time it's gotten there, it's gotten rejected. So now that it's approaching 150 again, I want to see, is this the time where it's going to break out, or is it going to get rejected yet again? So time will tell. And if you guys take a look here on the 3-year chart, we have a clear ascending triangle. And you can see it even better here that 150 is a huge sticking point. So if we end up squeezing out of 150, I'm telling you guys, and you'll remember this video when it happens, because it might not happen. It might not happen, but I'm confident it will happen ultimately, eventually, at some point. It will happen, and you'll remember this video when we see EA see that leg up. And it could go to 155, 160, and from there, it might consolidate a bit, sell off a bit. But overall, us as traders, me as a trader, I don't want to tell you guys what to do as always, but I'm looking to see if I can catch a move above 148 to 150. So I'm going to put my alert on this one at $150. Mark is at or above, right? So we're going to see if it breaks out of there so we can catch a move. Shopify is another one I'm looking at this week. We have also an inverse head and shoulder on this one. So we have 3 clear-cut inverse head and shoulders in this video: AMD, PayPal, and now Shopify. You guys can see the left shoulder, the head, the right shoulder. We're trading above both moving averages. We're noticing a golden cross is on the way here on the 4-hour chart. And now we just got to break out of roughly 1580. 1580, that was a sticking point back in July, also back in August a bit, and now early in September. We failed there last week. So if Shopify could take out 1580 and get into the 1600s, I see a gap fill coming to about 1660, which is the all-time high, and that is where that inverse head and shoulder would complete. So watch out for that on Shopify. Walmart is another one that I'm looking at here on this dip. Let me take a sip of my water real quick, guys. Gotta stay hydrated. Remember, always stay hydrated, guys. Very important. Walmart, WMT, this one hit an all-time high recently at $152.57. That was right around the earnings report, and it got pretty overbought. It hit an overbought spot on the RSI, pulled back a bit, rightfully so, and I hear my dog over here growling. I think she's having a nightmare. She twitches sometimes. I'm sure if you guys have dogs, they make weird noises when they have, when they sleep sometimes, and she's doing that right now. But anyway, Walmart, it's selling off, right? Well, it did. Now it's bouncing back, which is why we're covering it in this video. So it went from 152 to 146. That was about a 4% drop. Nothing crazy. That's very normal, very healthy. And you can see we held the higher low above the 180 SMA. And with Friday's push of roughly 70 cents, up 0.5%, we broke above the 50 SMA on this 4-hour chart. So I think 150 plus is coming again on Walmart, so we're going to be watching out for that. Pepsi is another one, PP, that I see an ascending triangle on. I just saw this one today. You guys can see it's been making higher lows ever since the end of June, but we've been seeing a sticking point at $158, $159 roughly. So if the ascending triangle plays out, you guys know what's going to happen. Pepsi is going to see a squeeze out of there. Oh, but now that I'm looking at this, wait a second. Did they pay a dividend already? They did. And typically, you guys might not know this, some probably do, but when companies pay a dividend, dividend-paying companies, the day that they report the dividend, the stock usually drops, which is why most of the time it recovers afterwards, but it usually drops that day. And you guys can see here, Pepsi closed at 158 on the 1st of September, and then it dropped down to about 155 after it gave that dividend out of $1.07 on the 2nd of September, and now it's recovered back to about 157. So I'm interested in seeing, do we end up breaking out into the 160s on Pepsi? That should be a good move there. Tattooed Chef is another one that I'm personally long on. Most of you guys know that, and I actually sold some covered calls on them last week. What did I buy? Or sell rather. I sold the September 17th $30 calls, which most likely, I'm 95% certain they're going to expire out of the money. They're down, the stock went down 8% on Friday after it had a meteoric rise since the last earnings report. They went up from $16, guys, to $25, which is a ridiculous move, 35%. So when you're selling covered calls, and by the way, tomorrow I'm making a covered call video, so it's going to be out. You've been asking for it, more options videos. You know what? They're coming, guys. They're coming because I'm back with trading options more often, selling them. I took a long break from selling options. I didn't do it for a while, but now I'm getting back into the swing of things, collecting that income from the premiums. And let me make a video for you guys. Why not? So watch out for that options video coming tomorrow. And when you're selling covered calls, the key thing is to collect that premium and for your call that you're selling to expire worthless. That is the goal, because at that point you keep your shares and you keep the premium. Because let's say this stock, again, I'm selling a $17 or a September 17th $30 call. If Tattooed Chef were to go to $30 or above on or before the expiration date, I would have to give up my shares, right? Because I'm selling calls. So that's the risk. You could lose your shares, but if you do it the right way and you pick a strike price above what your average cost is, you actually make money even if you give up your shares. So my average cost on Tattoo Chef's $18 per share roughly. So if I were to get my shares called away at $30, I would make $12 per share on my shares, right? And I would keep the premium, which I believe the premium I collected on those calls, I forget, honestly. I think 60 cents, 65 cents, something like that. So Tattooed Chef, let's see if it makes a move above the moving averages this week, whether it's at $20, $21, $22. We'll see on the 4-hour chart here. Watch out for it. And Home Depot is another one that I'm looking at. It's popping up a bit. It went up 0.8% on Friday, and you guys can see it's trading above both moving averages. Looks like it's getting towards the top of the wedge here. We've been making lower highs and higher lows for the past couple of months, getting deeper and deeper, getting deeper and deeper. Home Depot has into the wedge here. So I want to see if we end up breaking out, whether it's 330, 335. Do we end up breaking out, maybe going up to test those highs at 345? That is what I'm personally looking out for. So that's it. Those are 10 stocks that I'm looking at. And if you all stuck till the end, let me know in the comments. Drop that like button or hit that like button. Make sure to subscribe. And let's go over 3 bonus ones that I'm looking at this week. Alibaba's one. Alibaba is recovering a bit. It's gone from 152 to 170, although it has pulled back about $10 in the past 2 days of trading. On the 2nd of September, it was 180. Now it's at 170. So if this ends up breaking under the 50 moving average here on the 4-hour, expect it to go and take the lows out, or at least test the lows of $152. And at that point, I'm probably going to buy more Alibaba. Well, let me change that. I'm definitely going to be buying more Alibaba. And I've said this before, I'll say it again. The trend will not shift. It's still in a downtrend. It will not shift until we start breaking back over 200, 210, above the main moving average, the 180 moving average here on the 4-hour chart, and until it breaks the overall downtrend that you guys see. So watch out for that on Baba. FCEL is another one I'm looking at. And by the way, shout out to all you guys on Instagram that DM me a couple of stocks to talk about in this video. Make sure to follow me on Instagram if you haven't done so. By the way, it's at StasSurfS, literally my name put together, StasSerfes. Go follow me on there. And there are a couple of scammers, so keep that in mind. I'm never gonna DM you about crypto or some BS. I'm never going to message you first, period. So if people are trying to reach out to you, it's not me. I only have one Instagram. Again, at StasSurfS. Go follow me on there. Fuel Cell Energy, I'm watching this one. Even though it's gotten obliterated the past couple of months from $30, now it's at $6. Holy crap. It's down 80%, so it's well into a bear market. I'm watching this, guys, with earnings coming up on the 9th. 4 days from now, we have earnings. So maybe that spices things up for FCEL, gets it out of these moving averages, which have been resistance for the past couple of months. So look out for that. And ChargePoint CHPT is another one I'm keeping my eyes on. They actually had a good earnings report, and I'm surprised we're now selling off pretty aggressively from that initial spike after earnings. If you guys saw, it went from 21 to 25 bucks. Now we're back to 22, hanging on by a thread, about to be back to $21 per share. So I'm going to set my alert at, let's put it at $23.50. If this starts breaking back over that 180 moving average, both moving averages at that, because now it's trading under both of them. If it starts moving back over there, we might fill the gap to 27 bucks, the high point from the middle of August, and then from there maybe 30 bucks, which was the high from the middle of March, end of March, early September. Or rather April. I'm losing my mind here, guys. So that's it. We'll wrap it up there. If you guys enjoyed it, hit the like button, drop me a comment, subscribe. Check out my Patreon if you want all my real-time buys, sells, call-outs, a morning update video, more access to me, and private Discord access. All of that's on Patreon. Link down below, or you guys can go to StasSurfS.com/Patreon. Make sure to also get your 50 bucks from M1 Finance. That literally expires in 2 days. All you have to do is use my link, deposit $100, and we each get 50 bucks to invest with, and you guys can get your 2 stocks from Webull. Those are valued up to $1,600. Same with M1 Finance. Simply deposit $100. We each get 2 stocks, and you get your free money. So I'll catch you guys in the next video. Thanks for watching again, as always. And by the way, I made a video yesterday that was super important. Go check it out. We had a real talk. Talked about 12 minutes on that, 13 minutes. Check it out if you haven't done so already. I got a lot of awesome feedback there. I appreciate you guys as always. Keep crushing the markets. Stay safe out there. Peace out.